Greetings to all, and thanks for returning to Everything Tesla Stock. One of the best equities in the electric vehicle business is Tesla. The company's shareholder returns over the last year were 9.7%, a great outcome when you compare it to the general returns of the U.S. market, which were 18.4%. However, Jim Cramer of CNBC broke some startling news regarding Tesla shares in March of this year. The host of Mad Money stated that despite his former optimism for Tesla, he now chooses Ford over Tesla stocks. To learn more about that, watch the video through to the end. To stay updated on all things Tesla, remember to like, subscribe, and enable notifications before we get started. Since 2005, CNBC has aired Jim Cramer's investment advice show Mad Money, for which he is best known as an American TV personality. Granted, not all of his stock choices on the show brought in large sums of money for listeners. Nevertheless, Jim shares his thoughts on several stocks, including Tesla's, with his large following of followers that he has amassed over the years. In the past, Cramer co-founded ThisStreet.com, a website that provides financial advice, and he was the creator and manager of the multi-billion-dollar Cramer-Berkowitz hedge fund. Along with being a well-known author, he writes about stocks, money, and how to become wealthy. Jim Cramer was a fervent advocate of Tesla stock for a few years. A few years back, when he took his daughter's Tesla for a spin, he fell in love with the brand. He has been a fervent supporter of Tesla stock ever since. Nonetheless, Cramer stated in a March interview that he thinks Ford's stock will outperform Tesla stock. In order to dominate the electric vehicle (EV) market, Ford plans to produce roughly 2 million electric cars by 2026. Cramer claims that Jim Farley of Ford never creates anything that is not profitable. The rise in Ford's stock price since Farley became the company's CEO in October 2020 lends credence to this. Additionally, he has been steering the company toward electric vehicles rather than combustion engines, which, pardon the pun, is pushing the company into the same market area as Tesla. Jim Cramer predicted that Elon Musk's Cybertruck would be his first failure when he originally reviewed it a while back. Given that the Cybertruck has not yet been published, there has been a lot of anticipation and pre-sale orders placed, and the drop is scheduled for mid-2023. This is a really odd remark. In addition to criticizing Tesla's vehicle, Cramer advised viewers to purchase an electric Ford F-100 Lightning truck, which is an electric variant of the well-known American pickup. Now that we know where Jim Cramer is coming from, it's possible that he is correct when he predicts that Tesla will soon have fierce competition in the market for electric vehicles. Cramer may, however, still own some Tesla stock. But there is one thing that Cramer is overlooking. Tesla is more than just an electric car manufacturer. It goes much beyond that and is quickly approaching artificial intelligence. Autopilot is the principal artificial intelligence-related Tesla unit. In the past few years, Elon Musk has concentrated on developing a fully autonomous car that does not need a driver in addition to integrating tiny AI features like voice control and self-parking into Tesla vehicles. The goal of Tesla, according to Andrej Karpathy, head of artificial intelligence and autopilot vision, is to create a synthetic animal, a car that can move on its own and be a living, breathing organism that can sense and see its surroundings and react to them sensibly. These are the components of the internal-built synthetic animal. Tesla also wants to improve the intelligence and security of its self-driving technology. When it does take off, it will perform noticeably better than human driving, which will enhance driving conditions overall. However, it is highly unlikely that consumers will wish to purchase traditional automobiles after this self-driving technology becomes accessible. It's also crucial to remember that Tesla is looking into using AI for something other than autopilot and hopes to develop a Tesla bot. This device is a humanoid robot that will enhance human lives by taking over laborious or hazardous jobs. How can Cramer still bring Tesla into the car industry when the firm is actively developing artificial intelligence, AI, for its automobiles in addition to pursuing AI initiatives outside of the automotive industry? That's a serious query. When comparing Tesla and Ford, you can see that they operate in quite distinct markets. In the EV market, Ford is closing the gap with Tesla. But are the two businesses rivals? Despite their driver assistance technologies, Ford is likely a generation behind Tesla in terms of artificial intelligence advancements. Then, why did Jim Cramer stop endorsing Tesla? The general macroeconomic volatility, which has many analysts forecasting a global recession, is one of the solutions, though. Cramer is not one of those experts, though. He believes that if certain things go correctly, stocks are definitely going to soar and has a bullish view on the market. He stated in a recent interview that a variety of economic factors can affect investors' perceptions of the stock market and their choices regarding the purchase and sale of equities. Cramer lists the Federal Reserve's decision to start a soft landing, which would assist control inflation and prevent a recession in the future, as one of the key determinants. Only minor adjustments are needed. Everything else doesn't need to go perfectly, he stated. A decline in oil prices might be the solution. Numerous indicators of declining inflation could have the same effect. Cramer also mentioned that a rising stock market in the absence of news is a very good indicator. It's quite obvious from all of his comments that Jim Cramer has a very positive outlook for the stock market going forward. Returning to our initial query, why, if he believes in the market, is he not bullish about Tesla stock? Initially, it could appear that Jim Cramer has only focused on an electric vehicle startup that isn't Tesla. But upon closer inspection, it becomes evident that this is untrue. The expert has not stated that it supports any other manufacturer of electric vehicles. For example, he stated that, while he does not believe the U.S. EV manufacturer Rivian is the next Tesla, it is a rather ugly truck manufacturer. In addition, he said that it would be preferable for Ford to sell its Rivian shares and offered a positive statement regarding General Motors. Cramer asserts that Mary Barra, the CEO of General Motors, is doing a respectable job of leading the company's robust van division. After examining every statement made by Cramer earlier, we can now conclude that the expert has changed his opinion on investing in general and now favors legacy automakers with a solid track record. Even while Cramer believes in value stocks, they have also had difficulties lately. The global economy and stock market have been adversely impacted by the outbreak of monkeypox, reports of a new COVID pandemic, and exceptionally high geopolitical tensions. Despite the extremely tight financial environment, Tesla hopes to attract more customers as a result of higher gas costs brought on by the conflict. Considering the rise in Tesla's stock price, this is already apparent. Customers will switch to electric vehicles more and more if the conflict persists, since they will require less maintenance. Given that Tesla is the industry leader in electric car sales, a significant shift in consumer preferences will undoubtedly have an impact on the company's stock price over time. The change might have a significant effect on Tesla's pricing as it exceeds its 2026 goals. Although Jim Cramer's analysis is sound and grounded in data and past economic cycles, it is important to take into account consumer behavior, which is frequently influenced by a wide range of interrelated variables. Although the exact reason behind Cramer's betrayal of Tesla and Elon Musk remains unknown, it is certain that Tesla is focusing on artificial intelligence in order to secure a stable future. It is imperative to bear in mind that Tesla is a growth stock, which entails some risk but has the potential to yield significant financial gains. I appreciate you seeing. Please watch our other videos and feel free to subscribe to the channel and like this one. Select one of these two videos to watch on your screen while you're still here. I'll see you over there.